Yeah, let's get some W's. That's valid. I wanted that midnight opening price, but I'll settle for 50 handles. That's cool too. We have a small little fair value gap. This is what I like to see take us higher. I want this entire lower one here to stay open, but we have a small little inefficiency right there. So I'm watching to see if there's any support in that. So if we tap this down close candle again, I'll look to buy that, and my stop would go below the breakaway gap. If it gives me a chance to get in. If not, then I may have to use the inversion fair value gap as an entry, which is fine. So it looks like it's running. I may just buy the high of it. If we could trade back down. Stop below consequent encroachment of the breakaway gap. So that's fine. And let's put on consequent encroachment. So let's see, as far as targeting goes, I like this inefficiency up here. I like to see us get back above the midnight opening price, but should NASDAQ run up and tap this SIBI, this fair value gap, I'll use that as a partial. I'm watching the inversion fair value gap and its consequent encroachment. Does that send us higher? And then we also have this bullish order block. If we fail to trade down to the order block and we start to run away, to me that's really bullish, because so far we haven't shown a willingness to trade down to the breakaway gap. And if we don't trade to the order block, that's telling me that NASDAQ's in a hurry to start running. So that's that. Premium. All right, so first partial comes off at this fair value gap, which is also your first presentation fair value gap. So let's actually label it as such. Stop gets moved to break even should we take out this short-term high up here. Until then, I'm not in a rush. But so far, I like how we couldn't even trade down to the bullish order block. The bodies, what's it respecting? Consequent encroachment of the inversion fair value gap. Getting some nice displacement. And then should we take out this minor buy side, then my risk comes off. But I will reduce some of my risk by trailing it underneath the bullish order block. This down close candle here, really underneath this swing low. So the low of this candle comes in at 242.75. So we'll just do 242 even. Not a bad risk to reward. Again, I'm waiting for us to see if we could take out the minor buy side. We talked about the opening bell. Who's been making money since 9:30? Everybody's shorting right at the open, chasing it going lower. I don't want to be a part of that group. So I like the buy side up here, and then it'll be a risk-free trade should we take out this high. Partial comes off here. So we have a fair value gap here. I'm also using that as insight. Do we leave it open and start to run away? Okay, if we can't even trade to this fair value gap, that's super bullish. If we do trade down into it, do we respect consequent encroachment? Do we just use it like an institutional order flow entry drill? Do we completely overrun the entire fair value gap, which is what I don't want to see? Okay, do we return back to the inversion fair value gap? Or do we just continue to stay strong? Those are all things that I'm looking at. Okay, we talked about in the webinar a couple weeks ago, failure to reach certain PD arrays. So if we fail to reach this fair value gap, if we trade down, fail to reach the inversion fair value gap, we fail to reach the opening price of the order block, what is that telling you? NASDAQ's running. It don't got time to play around. Like, it has places to be. So I don't want to see the order block traded to. I don't want to see this fair value gap traded to. I don't want to see the inversion fair value gap traded to. If NASDAQ's running, like, let's go. I'm already on board. Let's get this train rolling. So right now, I love the feedback that we're getting. It's looking really strong, like it's in a hurry to get back up into a discount. I'm long 3 micros on my personal, up about $200, and I'm taking a partial in the same spot, which is about right here. Gonna trail my stop underneath the inversion fair value gap. The low that comes in at 59.50. So 59.25 is my stop. And then again, once we take out that high, then I'll feel comfortable taking off my risk. If you have multiple micros on, like if you trade 6, 7, 8, 9, 10 micros, that's not a bad partial there. So NASDAQ just fell short of that minor buy side. See if we can poke our head up above that. Small little fair value gap here with the volume imbalance. So if you have a volume imbalance attached to your fair value gap, you have to include the entire volume imbalance. So it will look like this. Okay, so far this candle open, traded down, and I'm watching to see if this can take us higher. And again, same thing with every other PD array. I don't want to see the lower half traded to. Hello, we open, trade down. Do we trade to consequent encroachment? Do we trade to midpoint? Did we trade to the lower half? Okay, we did not. So that's the insight that I love to look for. So now a risk-free trade. Lock in a couple more ticks just for the sake of spread. Okay, this is paper trading, the screen that you're seeing, but I'm in the same exact long on my personal account and I'm taking off my risk. Plus a few ticks for commissions and all that stuff. So I like to see speed above this high. That small little poke above the buy side, in my opinion, that's not enough. That's not really convincing. I like to see us really blast through it, get a nice strong close above it. In my opinion, all we did here was just form relative equal highs, which is generating more buy side. So that small little poke by like a couple of ticks, that's not enough for me. Here's your breakaway gap that we said wanted to stay open. Did it stay open? Absolutely. Inversion fair value gap, we're watching to offer support. Where do the bodies open and close? Consequent encroachment, awesome. Love to see that. are the bodies closing past constant encroachment of the fair value gap. So far, we're staying in the upper half. The wicks do the damage, that's fine, but I'm watching to see where we close. Zoom in a little tighter if I can. Let's see. 500 ticks just sounds nice. Come on. Get up there. Come on. There we go. So something I'm looking at, looking left, we have this buy side imbalance, sell side inefficiency with this candle. So just for visual reference, this fair value gap here, I'm watching to see if we trade down into it. If we fail to do that, that's bullish yet again. This is a reclaimed bullish fair value gap. So far we haven't traded down into it, but if we did, I'd like for that to offer support. Okay, this fair value gap, we traded beneath it, didn't have any respect for it. Okay, now that we're back above it, I'm watching to see if there's any support and if that can take us higher. So we're in that right now. So let's take this off. Draw this out. Let's go to 2-minute chart. Clean this up a little bit. 4, 5. Small little fair value gap on the 5-minute chart. I like to see that stay open though. Like where the bodies are stopping right here. But again, I'm seeing these as relative equal highs. So now what I like to see is some speed above that. My drawn liquidity for my first partial is still that first presentation fair value gap. So yes, we did take out that minor buy side, but it's just not convincing enough for my liking. The body's respecting that reclaimed fair value gap. Okay. Seeing this as a normal fair value gap, as if we had one right here. We didn't care for it here. It didn't take us higher. How come this fair value gap didn't offer support? We wanted lower prices. Those new week opening gaps, that cluster of new week opening gaps. Once we reach a discount, get back above this fair value gap, then you can expect it to offer support. Bingo. And I'm looking for a signature, which is speed above the buy side. Okay, I don't want to see us just poke our head above it and then retrace. I'm looking for strong, fast, aggressive, up close candles, run out the buy side with a lot of aggressiveness. All right, so this next candle here, this candle or the next one, I'm watching these two down close candles as a potential bullish order block and its mean threshold, which is midpoint. So the upper half of this down close candle, I like for that to be used as support. So from the high all the way to midpoint, that whole region, I'm watching to see if that could take us higher into the buy side, but more specifically back into that first presentation fair value gap. So I'm allowing for price to work in that upper half, which is mean threshold. Would I be crazy to get in at this order block? I can't tell you when to get in, when to get out. I'm just reading price. Still looking for speed. That's a signature that I really want to see. All right. So do we get speed here? Do we stay strong? Do we maintain a bullish candle? That gives me a lot of insight. Should we stay strong here with a strong up close, then I feel more confident that NASDAQ's likely to get back above that midnight opening price. So I'm watching to see this candle, the next one. Do we stay strong, stay bullish? My focus is up here. Really, it's up here in the buy side. So right now we just wicked above it. And that's, to me, that's not enough. That's not convincing. I want aggressiveness. How often do you add to your position? It depends on the situation. But I'm more just one shot, one kill. Go in with 5 micros, 8 micros, and then I'll scale out partials. The last trade I took, which was the final hour macro trade, I was pyramiding. So I went long 5 contracts in the breaker. Then I went long 3 contracts in a volume imbalance. And then I went long like 2 more contracts with the order block or something like that. So in that instance, I pyramided, but that's a skill set that I'm still working on. But next year, you'll definitely see more pyramiding. I'll probably be on like a seconds chart next year. So I'm improving just like everybody else. All right, trailing my stop beneath the bullish order block, which is this candle's low. That comes in at 282.25. All right, so stop locking in about, what is that? About 12 handles or so. And first partial comes in at a nice 50 handles. Not too shabby. Should NASDAQ hit it, of course. She can have a water cup. And there's your partial. Bagged and tagged. Nice little 50 handle partial. And now I like to see us get back above the midnight opening price. What do we talk about? Let's get that opening price at 10 o'clock. Just down here. All right, we're way beneath that midnight opening price. Once we're trading down here, way beneath the midnight open, way beneath that 8:30 open, and once we open at 10 o'clock down here and trade down, at this point in time, where are we? 1, we're in a macro. 2, we're trading in a cluster, literally 5 or 6 new week opening gaps, and we're beneath all 3 opening prices. Okay, remember, you guys heard me say, if we're beneath all 3 opening prices, 1 of 2 things are going to happen. Either we're just going to have a really, really trending day where it's just lower, 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 or we're going up and there will be a setup to go long. Those are my exact words. And behold, your setups to go long. It's textbook. Absolutely textbook. It doesn't get any better than that. On my personal account, I'm going to take another partial above. I might just let the last 2 contracts ride to the midnight open, which comes in at about, we'll just call it 390. and I'll just let that cook. That homework paid out literally straight from the homework assignment we sent out in the Discord. Find long setups that are what? Beneath that midnight opening price. Why did I choose that as a homework assignment? Because 9 times out of 10, what happens? If we're beneath the midnight open, 8:30 open, and 10 a.m. open, if we're beneath all those price levels, we're likely going higher. Vice versa if we're above it. Straight from the homework assignment. Good catch. So now I'm watching this fair value gap, obviously, seeing if that can take us higher. We tap the high of the opening range. That's something I've been back testing for a while. Opening range high, opening range low, and the reaction off of those levels. Okay, I don't include the 930 candle, so the high of the opening range is right here. So same thing we've been talking about with this fair value gap, this fair value gap, this fair value gap. Do we stay in the upper half? Do we respect consequent encroachment? Do we fail to reach consequent encroachment? Do we close past consequent encroachment? Do we leave this fair value gap open in its entirety? So far in this candle, we open, trade down, hit what? Consequent encroachment. So far, showing an unwillingness to trade to the lower half. That's exactly what you want to see if you're in a long. So now I'm watching, can we get some speed above this short-term high? Okay, that's straight from the webinar a couple weeks ago. We rally up, retrace into a discount PD array. That short-term high that was formed as part of the retracement into a discount. You like to see speed above that aggressiveness. So let's take this off. Now I'm watching this wick. Okay, wicks are gaps. So I'm seeing if there's any sensitivity, any support in this wick from 1027. And I'm also watching its consequent encroachment as well. So let's zoom in a little tighter just for the sake of teaching. So take this entire wick, get its midpoint consequent encroachment. I'm seeing that as any normal inefficiency. I'm watching, do we close past it? Do we respect it? Do the bodies stay in the upper half of the wick and take us higher? Because what am I looking for? Speed above this high here. That's a classic signature that tells me I'm on side, and I'm likely to stay on side. I'll be chatting it up with y'all in Discord. If you had any wins, if you took any trades, post them in the chat. I'd love to see what you guys did. If you didn't get on board with this move, no big deal. All right, this stuff happens every day, every week, and it won't stop. See you guys in tomorrow's stream at 9:30. Be safe if you're still trading, and I'll catch y'all in the next one. Peace.